Hello, agents. Hello, everyone. Welcome to Monday, October 10th, 2022. And happy because I was able to put together a hot list again. It's been a while since I could call even anything too hot. But yeah, so I put a hot list together for October 22. And let's just jump into it and see what's going on the hot list for fixed annuities. So here it is my hot list. And the first thing you'll see here is just some social media links. If you want to follow me, LinkedIn's the best place for up-to-date daily updates. Of course, YouTube's where I put the videos, and Instagram, I do some basic ads. So that's that. So let's go ahead and take a look at the products on the hot list today. So we have a 2-year. This 2-year is available. It's a 45-day exit window. So it's not a true walk away, this one. But take a look at it. It has 10% free withdrawals. The rate's 3.5, and it's limited to these states. So be aware of that. Just the little limitations on this one, shorter term. And again, if you click on the rate, and I'll have a link in the description to this PDF for the hot list, but if you click on the rate, it'll bring you to a little more information regarding the product. And they do have multiple terms, but 2 is their hot area. It is an A- rated company with the best. The minimum deposit is $25,000. But the rate is 3.4 at that. So you need the 100,000 to get the 3.5% rate here. Still not bad. There's your surrender charge in your 45-day window and the state approvals. It does issue to age 95, and there is a 10% free withdrawal, and that can be cumulative up to 20%, which is really cool. Full death benefit, has some nursing home and stuff like that to it. Some waivers, which is always very client-friendly product. Next, we'll jump to the 3-year. 3-year, we just had a rate increase here. So that's cool. And I really like this company. Very good company. This is a true walk away. Also an A- excellent rated company. Walk away means that there's no 30-day window to re-up or make a decision. So you can kind of time the market really well. And there's no pressure to move if the client's on vacation or if you're waiting for maybe rates to go up, which is kind of where we are now. I've had a couple clients mature with walkaways, and they're just sitting and holding for about a month or two to see what rates do. But we could always jump in and move it if we see a decrease. So that's what I like about the walk away. It gives so much more availability at the end of the term. Again, this is 4.25. This one's a little more different. This is what I call an enhanced rate product. There's no free withdrawal, so you have to leave it to accumulate for the whole 3 years. And the death benefit is limited. And what I mean by that is, should the owner die, the beneficiary, if they try to take the whole amount right away, they will charge the surrender charge. So the beneficiary should hold the contract and can hold the contract to the end of the term. Then it's fully liquid for them. This product's not available in Delaware or New York. It issues to age 90 in most states. Some states is 75, like California. So if you click again on the rate here, they do have multiple terms as well. Their 3-year is their hot bucket. And you can see in California and Florida, it issues to age 75. And the cool thing about this one is you can start it with $10,000. There's no banded rate there. And so that's very nice. You don't need a very large premium to start with that one. Again, that's a 3-year walk away, no surrender after the term. Now we have a 4.95 for 5 years. This is a great product, a great rate, A+ rated company here. If you click on this, you're just going to be able to request a agent kit right now. I haven't built out the page for that. It pays a very nice, fair commission, 10% free withdrawals included, full death benefit included. It's not available in New York, and rates in California and Delaware are lower. California, I believe, is 15 basis points lower. So that's a great one for 5 years, almost at the 5% mark. Very pretty. 5 for 5 is a magic thing. We do have a 515. So this is one of the highest rates in the country right now. It is also available from an A+ company. Nice commission, great rate, true walk away. 10% withdrawals, full death benefit. Again, California rates 15 basis points lower, still 5%. Really awesome. Happy with the increases there. Now take a look at the immediate annuities. I'll go ahead and zoom in here a bit. But immediate annuities are also up. This is the lifetime-based income right here. And I have done some sample quotes based on a $500,000 premium in non-qualified money. So we can talk about an exclusion ratio, assuming it's 100% cost basis and non-premium tax state. So some states will charge a premium tax, which would lower the monthly income by a bit. So, and when we say cost basis, that's assuming no, all the taxes are paid. This is after tax money, like basically from a checking account or something. And 100% cost basis means all of it has been fully taxed. So if we look at it, we have a life in 10 here. 65-year-old male can get a monthly income of $29.27 with a 68% exclusion ratio up to life expectancy return of premium, right? Until their whole premium's been returned. That's really great. These exclusion ratios are way down. And the reason it's a good thing to have a lower exclusion ratio. The lower the exclusion ratio means the more interest is coming out, because the only part that's excluded is the principal that's part of the payment coming out, because principal and interest are part of your immediate annuity payments, right? So really cool. And if you look at this 80-year-old female at 4130, this exclusion was actually 100%, meaning this 80-year-old was basically lucky to get any interest on the immediate annuity back then because of the life expectancy timing and that principal return. But now it's way down. So the interest rates are way up on this stuff, which is a really good thing. We're really happy about that. And if you want, you can pause the screen here and take a look at some of the options available. I went through 60, 70, 75, and 80, male and female, life in 10, life in 15. And what life in 10 means it's going to pay for as long as the client's alive, but no less than 10 years. So if they should die in the 5th year, it'll pay 5 years to the beneficiary. But if they live 50 years, it'll continue to pay. So that's really cool. We like that. And the 15, same thing, only 15 years is the minimum amount you can get, 180 payments. But if you're alive, so if that 65-year-old is alive in 15 years at age 80, they will still pay. So if they're lived to 95, it'll still pay. But should they, God forbid, die at 70, it will pay 10 years to the beneficiaries, right? Really cool stuff. That's how it works. And if you need an illustration or want to learn more, feel free to give me a contact me, or you can go ahead and click right here. And it'll bring you to our quote request page at spiaquote.com. So that's all great stuff. I'll also have a link in the description to this PDF, and it will have, these pages where you can click and just go right to my MYG request. Go ahead and click the term, like 3 years. Make sure you put all these red dot information in so I can get you a good quote. Otherwise, I won't have enough information to quote for you. And if you do it right, when you hit submit, it'll say thank you. A nice little thank you page will pop up, and we'll bang those quotes out for you. So, and then same for SPIA. You can click on this and bring you right to the SPIA quote. And this is my final page here. Let me reduce the size a little. As you can see, if you want to get on the calendar for a virtual or, a Zoom meeting or phone, you could always just call in for a phone. You don't really have to schedule it. But you can go ahead and schedule a Zoom with me if you want to get online there. Real quick on that PDF, and follow our YouTube and LinkedIn. This is my LinkedIn page. Well, you'll have to be signed in, I guess, to get to LinkedIn. I don't know why it does that. Or you can go ahead and follow us on our YouTube page right there. There it is. We have all that stuff set up. You can go back and check out a bunch of past stuff we've done and past videos I've done regarding all different types of fixed annuity stuff. So hope I didn't leave anything out there. If you have any questions, of course, feel free to call me at 800-373-9697. Follow me on LinkedIn and YouTube for the most up-to-date information, and hope you all have a really great rest of your week. And thanks for watching. Talk to you soon. Bye-bye.